subscribe to this channel for more videos so that you don't miss any update.
In this video, I'm going to show you 3 swing trading strategies that work 90% of the time. What is swing trading all about? Swing trading is a medium duration trading style that is used by Forex traders who attempt to profit from price swings. There are 3 swing trading strategies we are going to demonstrate. Swing trading strategy number 1. Price trapped in a range box. Swing trading in a range market, because the market is trapped in the middle of support and resistance. Let us demonstrate it, and see how it works. You can see how the price stops at the resistance and support lines, and reverses. That is called the range bound. So all you have to do is to wait, and hope the price gets to the line or key levels. Then wait for signal to open a trade. You must not open a trade at the middle, because it may reverse back and it becomes a loss. You must not open a trade because price reaches at the key level. You have to wait for a price action reversal candlestick pattern, as a signal before you jump in, like the one shown here. This is inside bar candlestick pattern. Enter here. This is hammer, at the support line, a reversal signal. Wait. Enter here. You can see reversal candlestick patterns, formed at the support and resistance levels, that indicates what we call confluence formation of signal, which works 90% of the time. The takeaway here is, you are to find a range-bound market, and wait for price to reach the key levels, then wait for signal to trade. You must wait, because it can break the level and push further north or south as case may be. The second swing strategy is to look out when the price is oversold and overbought. Overbought means an long drawn-out price move to the upside, oversold to the downside. When price reaches these extreme levels, a reversal is possible. The Relative Strength Index, RSI, oscillator can be used to confirm a reversal in swing trading. It is overbought and oversold levels. Whenever price gets to any of the levels a swing trader should look out for. Price action signal for possible entry. In this demonstration you can see how the RSI is meshed with the price. With this, a trader can easily enter a trade at the extreme levels, for possible reversal. Swing trading strategies number 3. Catch the pullback. This swing trading strategy, emphasis on catching an impending market move, in a trending market. The notion here, is to open a trade after the retracement has ended, when the trend is most likely to carry on. That is, you want to trade trends that have a more deep retracement, because the trend is most likely to continue. As a rule, you want to see a retracement at least towards a moving average, like the 50-period moving average. Now, let's study how to catch the trend with this type of swing trading method. First of all, you have to detect a trend that respects the 50 moving average. Secondly, if the market price approaches the moving average, then wait for a bullish price rejection candlestick pattern. If the trend is an uptrend, if there's a bullish price rejection, then open a buy trade on next candle. Set your stop loss 1 ATR below the low, and take profits before the next swing high. Here are the advantages and disadvantages of swing trading. Number 1. Your trades can last for days, so no need to spend hours in front of your computer. Number 2. It is good for those with a full-time job. Number 3. Less stress compared to day trading. Disadvantage. You are going to experience overnight risk.
Subscribe to this channel for more videos so that you don't miss any update. And don't fail to hit the like and share buttons so that your friends can see it.